Welcome to today's Deal of the Week video, powered by Coca-Cola Zero. I should be sponsored at this point with how much I drink it. Or sparkling water, actually, I should be sponsored. And Liquid Death, too, since I just drink a bunch of fake drinks. But today's Deal of the Week, I think, is really cool because I don't actually talk about my clients that do a lot of commercial properties, and this one is a commercial property. It's an 8-unit apartment building. I want to just jump right into the specifics for you guys because this thing is a moneymaker, and people think that getting multifamilies is a little bit out of the reach. But when you think about the long-term play and how you can actually scale your real estate portfolio, the way that you can get into it is by finding the money. And so our goal is to see how quickly we can get into the money that we need in order to get into this next deal. Now, in general, commercial buildings are more expensive. Now, when you think about some of these different markets though, and you look in places like, Ohio, Alabama, Illinois, Arkansas, you're going to find properties that are at lower price points where the deals actually make sense and they will still cash flow. You just have to be willing to be able to put in the work. And so what's cool is that this client actually took his money as equity from another deal, is now reinvesting this into a new property. It's going to be a commercial property. I always tell my investors that when we look at starting with properties, we always want to start with residential real estate first, and then we want to move into commercial buildings. So, go buy the duplex, triplex, fourplex first. Understand how to get the skills as a landlord, then take that money and go reinvest into the next deal. So purchase price on this 8-unit was $380,000. Surprisingly enough, yes, it's the price of what you would pay for a single family residence. And he got it for $380 grand. It was listed on the market at $350. Got it under contract at $380. But we're doing something unique because most commercial lenders actually require people to come in with different kinds of loan programs. Like, they don't do 30-year fixed mortgages on commercial real estate. Most commercial lenders require that you'll do like a 5, 7, or a 10-year fixed interest rate with a shorter term. So when we think about a 30-year fixed mortgage, your payment is fixed over the 30 years, principal and interest. When we look at adjustable rate mortgages, like what we would compare with a commercial property, you're going to get a fixed rate for a certain amount of time. So 5, 7, or 10 years. That's where the rate is fixed. The term, though, is typically 20 or 25 years, not 30. This basically means that your payment is actually increased because you're paying it off over a short amount of time, 20 or 30, 20 or 25 years. Overall, it's less ideal. You're going to lead to less cash flow. So even though in this scenario, we took a higher interest rate to get a 30-year fixed mortgage, it's leading to more cash flow over the long term because you don't have to worry about refinancing when that interest rate's not fixed anymore. And so adjustable rate mortgages, sometimes they make sense. Most of the time they don't make sense unless you're a savvy investor and we can actually tell you, yes, let's go this route, or no, let's not go this route. So $380,000 purchase price. Down payment was 25%, which came in at $95,000. The loan amount, which is what the bank is borrowing, is lending $285,000. Now, most banks, I will tell you, most commercial banks will not go below $500,000. A lot of commercial lenders, they want to see a minimum size of $500,000. It's just going to limit the pool of banks that we're going to be able to shop against for you in order to be able to find a better deal. Interest rate we were able to secure was at an 8.99%, leading to principal and interest. Our principal and interest payment on this was $2,091.23. Homeowners insurance is at $166.25 for a commercial policy. Property taxes in the state of Ohio are more expensive, and so it came in at $577 per month, leading to a total of $2,800 per month for the entire payment on this 8-unit. Now, when it comes to multifamilies, yes, you want to still factor in and run your numbers with all of the other things that come with property management, that come with repairs, maintenance, management fees, landscaping, snow if it's in a market that has snow, all of those things that are different that you wouldn't necessarily have to deal with as much if you had a residential real estate. And so that's where it can become different. But once he has the property stabilized with renovated units, the rent that he's going to be getting is $6,700 a month, with a $2,800 mortgage payment is insane. That is over almost $4,000 in cash flow that we're going to be getting on this property, assuming that we're not factoring the other expenses that come with your, outside of your mortgage payment. But it goes to show that deals like this are still able to be factored, because even if we were to separate, let's say $1,000 for what most real estate investors call capital expenditures. Capital expenditures are just all your miscellaneous costs outside of the payment. In total, it's still coming in, you're still pocketing $2,500 to $3,000 per month for the 8 unit. And what I like is that, yeah, it's going to take some time to make this money back for a down payment, but now you also get tax savings because you have a multifamily property. You're going to have landlord experience if you want to manage the project yourself, or you're going to understand what your property manager is going to do. And you're going to have a commercial property that's going to continue to appreciate over time, that eventually you can tap into more equity, take that money, reinvest it into the next deal, continue to scale your real estate portfolio. So, I'm going to continue to show you guys every single week the videos about the clients of mine that are buying these investment properties that are having success across the US. Just because you can't find a property in your specific market doesn't mean that you can't find one in another part of the US. My team and I are here to help you scale that real estate portfolio, and I want to show you guys the way that we're able to do it with the lowest money out of pocket while still getting you better terms on the loan. So if you haven't seen my last deal of the week video, you guys can click here or here, wherever my team puts it. Watch that video, learn more about what we do, and I will see you guys in the next deal of the week.
That don't pop in the hood, man. I'm talking about the grimy in the hood.